you thinking about buying or selling a home in the holiday season? Are you looking for the latest updates in terms of what has been going on? Are home prices going up? Are they going down as we enter in December and January? Did you just read that Morgan Stanley made a very bold claim that home prices are going to be dropping next year? Let's take a look at this together and so we can digest all of this information and so that you can make the best decision for yourself with your appropriate moves. And I'm going to give you my forecast as to what I will likely see in 2024. Let's get into it and let's go over this first headline article of the week. Morgan Stanley makes a bold, tough prediction for home prices next year. If you're a home buyer or a seller, mortgage rates are always a big concern, blah, 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 same things over and over again. The key that I want to get you to this is what is your actual prediction? Their prediction is that they may see a potential decline in prices. Existing home prices can fall as much as 5%. That's it. That's your bold claim. Now, whenever I see these predictions, because you're going to see a lot of these predictions all over. In Morgan Stanley's case, they're predicting a drop of 5%. If you look at all these other reports, whether it's the NAR, expect prices to rise by 2.6%. If you're looking at other California Association of Realtors, they're also going to have likely an increase. All of them are, to be fair, always a one crapshoot. It's all over the place, number one. Number two, it's not localized, right? Every area is going through different things right now. I mean, compare what you have going on to the Bay. Just think about what has been going on in the Bay Area over the last few years. In the peak time, the Bay Area was not a competitive place relative to other places like in Texas and Florida. Why? Because you had a big net migration to those other areas because jobs were very flexible. What happened this year? That migration has all moved back to the Bay. And so because of that, then you have a lot more people that are deciding to settle down and make a move here versus other areas. And that's also why you see places like Austin have a very, very dismal winter season and winter quarter. So these can flow. You can make a choice that you're betting one long term or the other. At the end of the day, you're in the Bay Area. I'm in the Bay Area. We're here because we have a long term bet that tech is going to continue to be a very big beneficial and a really big player for the Bay Area and along with this whole country. And so the Bay Area is always well positioned for that. So, but when you see all these different stats, you're going to see predictions all over the place. Some will say good, some will say bad. The key is there's no accountability for any of this anyways. So whether you see a Zillow forecast, Redfin forecast, Realtor.com forecast, to be fair, my forecast, there's no like there's I'm not betting anything on this. I'm giving my transparent thoughts of the data and what I see, but there's no repercussions if they got this wrong. And here's why I want to bring this up because this Morgan Stanley report was not long ago. It was only a little over a month ago. But I dug up because there's no accountability, right? If someone's claiming a recession every year, if you keep crying wolf every year, you're eventually going to hit it, but you're going to miss all those gains and all those years of payments that you're doing anyways. So let's take a look at this. Here's where Morgan Stanley made a bet of housing in 2023. When they made this article was in December 12th, 2022. What was their prediction then? According to Morgan Stanley, the U.S. home values would decline 4% more in 2023. Anticipates a 5% decline in U.S. home values in the second half of the year. Now, that may or may not be true from a macro perspective, but let's compare about the Bay Area. Look at Santa Clara County. If you compare November of last year versus November of this year, did it actually go down by 5%, 4%? The answer is no. It actually went up. How much did it go up by? About 8%. So this is why I wanted to bring this up because I got a few people sending me these articles because they're very clickbait. Because Morgan Stanley is quite frankly one of the only banks that have made a claim that they think that prices will drop. And even if they drop, it's not like a crazy amount, but either way, they said that. But to be fair, they've been saying it for the last year and they were wrong. They're wrong not just by that percent delta, they're wrong by how much it has increased. So instead of trying to think that they know what they're talking about, which they don't, and making like these very bold predictions, it's very, very important to just understand, look, at the end of the day, if you most of these good assets tend to go up in value. Yes, maybe in a few months it may go up or down. I don't know. You don't know. If you did, you'll be shorting stocks. You may be leveraging all in on making these bets. But the reality is, we don't really know what happens in a short time. I'm not like, unfortunately, if this week you may have saw, very sad, Charlie Munger has passed away. But Charlie Munger, Warren Buffett, they're not trying to time these markets either. They just want to have simple goals. What's their current strategy? Where do they want to get to? What are the things that they're trying to overcome? And for most people that are, let's say, renting, their first milestone is to get into your own place. That could be a condo or a townhome. And then people that have their condo and townhome, they live in it for 3 to 5 years. And at that point, they decide, what do they want to do next? Some may then sell that condo or townhome or rent it out if they can, and then buy the next one. Right? These are logical milestones instead of, oh, let's just wait and see. Can you believe that the year is already over? Like, we got 1 month left, and it's gone by like this. So the aspect of just saying and kind of wait and see, people have been waiting and seeing since last year. As we all know, if you remember, rates are in the very similar level as it was last year. Now, the other thing that has brought up a lot is, are rates still increasing? Are they still high? The reality is they are higher than artificially low numbers, but are they really that high? Take a look at what's been going on throughout the last really month. In the last several weeks, interest rates have virtually dropped by nearly 1%. Why did this drop so much when the Fed didn't necessarily cut rates? When it comes to interest rates and when it comes to mortgage yields, the reality is it also depends on what's forward looking. A lot of it's forward looking. So a lot of the things that are happening right now, inflation is significantly lower. These are all bets that people are saying, look, it's gonna be a bull run in the stock market. It's gonna be a bull run in assets. We're gonna get out of treasury because there may be likely no more increases or a cut. Now, whether you believe in that or not is your choice to make, but that's the reality of things. And so you can see rates have dropped by 1%. So what does that potentially mean for buyers? It means that at the end of the day, if you didn't buy something in the last 2-3 months, or actually not 2-3 months, the last month, your mortgage situation got better. If you actually bought during that time, you may already want to think about potentially refinancing if you're when you had to get it at the higher times. But to be fair, this is also an average. There are many clients that I work with that are much lower than this. Even jumbo loans right now are at 6.5%, or even lower than that, even the low sixes right now, right? So, and even conforming loans right now, they're in 6.5. So the numbers are actually much better than what you see here. And this is just an average amount. This is from a national level, but it is very important just to understand and see like what is really happening. Now I'm not saying this is going to keep going all the way down. Like I'd be very happy if I can see this go to 6% by the end of next year. And so all of the forecasts and all the bets are like saying if it can get there, that's great. Don't expect 5% or 4%. If it happens, wonderful. But expect that it's already a lot better than it was before. And to be fair, it's been pretty favorable. Now, the other thing I want to compare this to, take a look at this. You can see last year during November was at the same levels that we're at right now. And so the aspect of waiting over a year, you saw home prices went up 8%. The mortgage rate is actually kind of similar to the same time last year. This is why like it's so hard, it's impossible to time, and you got to still find the right house for yourself, and who knows how long that may take. So if you're consistently looking, I hope these are ammunition to have the confidence. Now, there's many ways people can interpret this all they want. Some people are saying, look, I'm going to believe Morgan Stanley only because they're the only bank I bank with. I trust the financial advisors there. Well, then respect. If you trust everybody at Morgan Stanley, respect to you. But if at the end of the day, you're renting and you're trying to get in a better situation, or you're in a smaller place and you need a bigger spot, keep in mind rates have been getting lower, and this has been bringing in more buyers. But the buyers don't come right away. And let's take a look at some of the numbers as to what's going on in the different counties. So take a look at this. Let's take a look at these are all single family condos and townhomes in the last month. You can see though there has been actually a decline. So keep in mind, November figures in general are homes have actually gotten contract and sold in October. So I would actually anticipate that December numbers may actually be maybe the same, if not lower, than what you see from November. Now, if you break this up, instead of right now we have it by single family condos and townhomes as an average, you can see that single family has also declined, right? So you can see single family has declined by 1.7 by 100,000, equivalent to 8% or so. So it's been beneficial for those that have been entering the market. Now, to be fair though, with a lot of the homes that you are now seeing, a lot of them may not be the best products out there. So when you ultimately make a bid, you should do the math exercise with myself and compare how does this one compare to that, and when did it actually sell relative to these periods. From there, then you can make a decision and see the result. Did it actually go above or below what the other's gone for? Now, don't take this opportunity for granted. It is fairly common that you see lower prices in the wintertime. Let's go over that numbers together so they can see. Let's just look at the last 5 years. And let's look at the data in general over the December and January timeframe. So December of 2018, it was a drop. It was a drop and it started increasing. December of 2019, same, and then increasing. 2020, COVID year, even decline, increasing. 2021 was where it was an anomaly. 2022, even 2022, dropped, and then started increasing. So if you take a look at the chart, it's kind of the same patterns, right? The same trends that you see consistently. It doesn't mean that it's going to keep going down indefinitely, but there is an opportunity to be had when it comes to buying or selling ultimately buying a place, not necessarily selling a place, but buying a place potentially during this time, right? And so this could be a great opportunity. Now, to be fair, it is some of the lowest prices that you see of the year, but it doesn't mean you're going to have a ton to look at. So what's very important is let's take a look at the number of new listings. Let's go back to all the different assets so we can just have a little bit more. So let's take a look at number of new listings during this time. So let's take a look at that, right? So the downside is December, as long as you're not traveling a lot, you're still looking at homes, you're going to see the least amount of homes, right? Take a look at these times. 417. The peak at that time was May 21, 27. And so that's equivalent to about a fifth. 402 to May, that's like roughly almost a sixth, but still a fifth. This was an unusual time, to be fair. Remember 2020, because it was very low then, and it was very backloaded. But take a look at 2021, 639 to May. Take a look at 2022, 377. Holy cow. To May. I mean, that's almost 1/6, 1/7. And then obviously we'll see what comes out here. So this year, though, to be fair, was also very different. Like, take a look at the number of homes that came on throughout the year. Because rates were higher, a lot of sellers chose not to sell. So that's why you see a way less new listings. This is not transactions. This is purely about new listings, right? So all of this is very important for you to understand. If you are around and you're not traveling every week, like you can travel 1 week, like weeks at a time. That's all good. Keep in mind when you're in contract, you're a 21 to 30-day close, right? So you can travel even in between as long as you coordinate that with the lender. And so you can understand on one end, it's a very favorable time right now to take advantage of potentially lower prices, but you should also be mindful. Take a look at the number of listings. Now, if you compare this to like the peak time, like the peak month, then you're talking about a fifth. But if you're comparing like the average of these, you're talking about like a fourth. So you can see you're about 25% of the homes come on the market this month versus any other months, right? So about a fourth. So you're going to see it way less. So that's why I tell people, look, if you're around, you're not traveling, you should actively look. If you are completely checked out, then you're checked out. This is a great opportunity because there's a whole lot more other people that are checked out, but don't be surprised. You're going to see less in general. Doesn't mean you won't see any, but you'll see significantly less. So hopefully this helps you understand. Now let's talk about price though, right? So as I mentioned before, prices did decline though during this time. So it goes back to there is an aspect of seasonality. It has been a pretty strong month relative to what it is, But right now, you're going to see some opportunities for price breaks. And this is significant, right? Like 146, the median in this case is 80K. That's what, 5% delta. Not bad, right? Not a bad discount that you could have. Better than the whole this stuff that you may have to deal with in the springtime where there's rising prices. So those are some good news. Now this is Santa Clara County when it comes to all asset types, single family, condos, townhomes. Let's compare. Are the other counties going through the same thing? Let's take a look at another one, San Mateo County. When you see the blend, it's been okay, right? San Mateo has been a lot more consistent throughout the month, so it's been okay. Similar kind of change, 165 to 1565. That's equivalent to also 80. So yeah, roughly the same. Let's take a look at San Francisco. Again, San Francisco going as bad as you may be thinking of the media? No, it's been as flat and as similar as it can be. Look at this. It went from 1.4 to 136. That's what, 3%? So not a whole lot of difference there. Let's take a look at Alameda County, places that are a little bit further out. Hasn't made much of a difference there. The answer is no, not really. Like Alameda County still has done fairly well. You can see it actually has a slight increase, but it's been relatively flat there. And let's take a look at one more county. Actually, let's look at two more. Let's look at Contra Costa County. Contra Costa County had initially declined as a lot of people continued to work back into the office, but you can see it's kind of leveled out. Okay, interesting. And then let's look at one more, Marin County. I was just there yesterday. We were looking at some cars there, but take a look at this. Marin County overall still pretty good. Actually, they had increased. So you will probably see declines as you have saw previously. Obviously, it's still going to be very driven by the type of property that you're looking at. Because this does not tell you anything about the condition of the home or the size of the home or the lot itself or if it's on the busy road or not. But in general, you will see likely a little bit less competition, and we should still see some small decline. But it's not a decline where it's like, oh, it's just continued its trend. It's a normal seasonality. There's a lot of people, as usual, they will be leaving and completely checked out of buying a place. I have many clients that are that way. They're like, Spencer, I'm already gone for December. I'm going to India. I'm going to wherever you're going to, and let's touch base in January. I'm like, all right, your choice. But if a lot of people of you are around, let's go, because this could be a time for you. So I hope this was helpful. If you have any questions, give me a call or text, 408-547-4590. I'll leave it in the comments below. I would love to set up a strategy call to go over a game plan for you, whether you're looking in the next month or even if you're looking next year. It's all good. I'm going to be around, and I'm going to be able to help you anywhere in the Bay. I'll see you in the next one. Bye now.